But first, let's take a look at the state of the market. Let's read the current volatility from a macroeconomic point of view. And to bring the month to a close for us, Michael Famoroti, who is the chief economist at Vertiva Capital Management, an investment and securities firm on Broad Street. Welcome to the program, Michael. Good morning. This is bloody, brutish, and brutal. Very quickly, how do we arrive at where we are at the moment? Is this just still pre-election period? What's biting investors on the rear side for this very brutal sell-off on our market straight?
Morning. I appreciate the Hobbes quote, but the market trend hasn't changed much, to be honest. I think this month the market has lost. In August and September, the market lost about 6%. Last month was even a better time when we lost only 1%. But generally this year, market has been down post-January. The factors are still the same. We talk about the election uncertainty. We talk about the external environment being unattractive because of the trade wars, because of U.S. monetary policy as well, and that has contributed to a general emerging market weakness.
That's on one side of the street. On the other side, investors are chasing yield curve because if you look at yesterday's open market operation, it's about 375 billion naira by the central bank and selling 364 instruments at about 14.75%. That shows that the central bank is also aggressive in mopping up market liquidity because of the season we're in.
Yes, it is, and it is contributing to the equity market rout because the yield expectation in the fixed income market is upward, again, because of the same factors driving out capital. So interest rates are going up abroad, and the elections are coming in Nigeria. So investors are demanding a higher yield for their investment, and obviously that's going to attract people. Unfortunately, the central bank policy is compounding the equity market slump, and we've seen that over the last week or so.
Okay, so the whipping boy, as always, is the Naira when the market moves like that. So the Naira yesterday lost its footing, the highest single-day loss since August last year. That's about 1.08%. The Naira, the parallel market is now 370. That's a record low.
Well, we have touched much higher levels, but those days are hopefully very far behind us. We're unsurprised by the pressure on the Naira, right? So we have mentioned that if you look at emerging market currencies, right, the Naira has performed remarkably well, and that's because the central bank has been aggressive at intervening in the currency markets, and we've seen that through the declining external reserves.
Okay.
Now the question.
Yeah, go ahead, please.
Yeah, the question is whether the CBN can sustain that. We do think that for the first half, they can. The $3 billion Eurobond that they issued recently will help. But market participants are growing ever more skeptical about the sustainability of the Naira around these 365 levels, and that's why we're seeing a depreciation.
Okay, let's wrap it up, Michael. What do you expect to hear from Godwin Emefiele tonight when he sits at the dinner table with the bankers for the CIBN annual dinner? Is there any signaling you would like to hear from him? This will be the official final time in 2018 when he will speak to the market community, unless anything unusual happens in December.
I expect him to once again reiterate that the CBN has all the ammunition and intention to end the Naira and supply dollars, and possibly indicate plans for demand management policies that were mentioned at the recent MPC meeting. Finally, he also warned them that he's going to keep Naira liquidity very tight, and for bankers, they'll probably be quite happy because that means higher rates in the fixed income market for them.
Okay, fair enough. Let's leave it there for today. Thank you very much, Michael. Let's leave it there for today. Wish you all the best in the new month and for the weekend as we step into the new month next week. Of course, the market is still in very big focus. One big aspect of the market is the commodities exchange. And in case you haven't been part of the conversation, quite a lot of folks are on Twitter talking about the commodities exchanges. How do we bring commodities exchanges into what we already have with the equities, with the fixed income, and the derivatives? Why do we need an agro-based commodities exchange? We're taking that conversation up when we come back.